Good morning everyone and welcome to Morning Markets. Before looking at how asset markets performed yesterday, I just wanted to do a quick reference for our Do More With Your Money show. It's the 150th episode and we have the senior partner team here at True Potential on the show. So please do look out for that later today. Then turning to asset markets and how did they perform yesterday, it was certainly a better day for equities, for bonds, and we did see a weakness coming through in the dollar. Why was that? It very much brings on from the themes that Kevin was discussing yesterday of inflation and that CPI print that we got from the US, which was very much in line with expectations, with inflation increasing 6.5% year on year. But importantly, that continues to provide evidence of the inflation rate declining. And indeed, on a month-on-month basis, we saw a decline of 0.1%. And I think that's the first time in about 2.5 years that we can say that we saw a month-on-month decline. So that is continuing to really feed into that narrative that the market has at this point in time, that we're moving from an inflationary period to something that is more disinflationary. And digging into the numbers, it's very evident really what's causing that. It's the decline in energy prices that we're seeing, but it's also those areas that we saw strength post the economy recovering from COVID, such as used cars, airline fares, those areas starting to show disinflation as well. The one area within the inflation reports that continues to show a positive direction, however, is that which is related to housing. And that's as much a technical aspect of the US inflation numbers, because as we look at some of the more real-time data, we are seeing a disinflationary trend there as well. And that's important, particularly as we look out further into this year. The other key aspect of why asset markets are reacting as they are is that it makes it more likely that we will see a further slowdown in the pace of interest rate increases in the US in particular. So if we cast our minds back to last year, we were seeing interest rates increase by 0.75%. That stepped down at the December meeting to a 0.5% increase. There's a building expectation that in the January meeting and in subsequent meetings over the first quarter of this year, it's likely that we might see increases of 0.25%. And indeed yesterday, after the data in the US, we heard from the Philadelphia Fed president suggesting that move to 0.25% would be appropriate. And that's certainly being received well from a sentiment perspective, and that is then evidence itself in how asset markets are performing. Just looking at the UK as well, I think it's worth mentioning the economic data that we've seen this morning, GDP for the month of November. Forecasters had been expecting a contraction month on month between October and November. That wasn't actually the case. We saw a very mild improvement. GDP actually increased 0.1% month on month. A large part of that, when you dig into the data from the ONS this morning, comes through from the leisure side of things and really probably just seeing a bit of a benefit from the World Cup. But it is just worth noting that in the UK, over recent days, we've seen better results from companies, particularly in the retail sector, just talking about a slightly stronger Christmas trading backdrop as well. So it'd be interesting just to see how over the next couple of months that feeds into the economic data. The other point to mention this morning, just briefly, is China. We've discussed the reopening of China and really what we saw with the trade data that's come out for the month of December was really why we needed to see that improvement come through, because the data is very weak. If we look at in terms of exports and imports, really not showing any material improvement. So really that decision to open the economy is important, and certainly we will look to see an improvement in those data points as we look through the first half and into the second half of this year. I'll leave it there for today, but as I said at the outset, please do look out for the Do More With Your Money show later today. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.